everyone. Good morning.
Good morning, sir.
Yeah. So, okay. So we are looking into the goods receipt process, like inventory process, right? We have just started. So there are a couple of things. So we have tested some of the scenario, and one more thing. So for this server, I have not set up any master data, or I have not set up any organization structure. So by next week I'll be trying to set up all of those things. So today we are going to see like what is the GL account posting. So before going that one, so here let's say yes there. Okay, so let us understand some of the tables. Okay, so first thing, here we are having two types of document in Migo, right? One, we are getting a material document. Second, we are getting a accounting document, right? So there are two types tables, two types of documents are there. So here, if we say about the material document table, so that is MKPF. Okay, so try to understand this one, and also there is a change in the table level for this one. Okay, so here you can see header material document. So let's say document year 20. Let's try to see if there is something. Okay, so there is one document is there. So now here you can see there is a material document is there, there is a accounting document is there. So basically here you can see both of the numbers are same. I believe the number range has been given as same number range. So you can take a different number range also for the accounting document and for the material document. So we'll just go here. I want to show you one thing over here. Okay, so this is the material document. If you go to the document information, FI document, here you can see there is a accounting document. If it is related to the value update or it is related to the accounting side, so there will be a accounting document. Okay, so now here in the accounting document, basically you are seeing this account numbers, what is the description, what is the debit or credit. Okay, so here your debit means positive and credit means negative. Okay, just try to remember this thing in SAP. If we say about the material management side, if someone is saying debiting, debit means plus, debit means plus, and credit means minus. Okay, so this is the thing. So now we will understand what are the accounting entries, and when this will occur, and what is the let's say process of this accounting entries. Okay, so maybe if this is open, then we can see. So I believe this system is slow. Okay, don't worry. Okay, so basically, whenever you enter some of the, let's say you create a material document, there will be accounting document will be created. Okay, so accounting document will be created. So in that case, what will happen? So accounting entries, you need to know what are the accounting entries for which scenario, what are the accounting entries are there. Okay, and for this accounting document, the table name is BKPF. Okay, BKPF, and the material your material document header is MKPF, and this is BKPF is the accounting document. Whatever accounting document is there, for that one you can see the table name is BKPF. Okay, if we go to /o sc16n, so here you can see there are MKPF table is there. So this is basically for your material document header, and there is MSEG table is there. So MSEG is for material label. Okay, so in the document we are having a header label and we are having a item or material label. So MKPF is the header label, MSEG is the material label. So similarly, if we go to BKPF is the accounting document header label. Same BSEG, if we go, so BSEG is the accounting document item label. Okay, segment label or item label. This is the BSEG table. So these are the tables. Now let's understand the GL accounting or accounting entries, how the accounting entries will happen whenever you do the, let's say, goods receipt, invoice receipt, and vendor payments. Okay, So now problem here we can no problem. So here what will happen? Let's understand one scenario. Let's say you are doing a GL account posting. So you are able to understand the table, right? So table, try to note it down or try to write it down. Table is very much important, and there is a change in the table level also. Right now in the S4 HANA, updated S4 HANA, let's say 2023, so or 22, there is a mat doc is there. Mat doc table is there. So inside the mat doc table, there is, I believe, almost 63 or 64 tables are combined. Okay, in which everything related to, let's say, material document, it will be available over there. So your MK, MSEG, BKPF, and BSEG. All of these tables will be inside the MatDoc table. Okay. So MatDoc table, this is material document. Okay. So here you can find all of the information related to material documents. Okay. Header, item, everything you will be getting. So this is mostly, this is a combination of 64 tables which are available in the ECC that is combined in the S4 HANA. Okay. So there will be no data redundancy will be there. Okay, means the data will be not stored, the same data will be not stored in the different table, but every data we can find it under one table, that is a material document table. Okay, so this is the new thing. This is also, you can, if you are going to the interview, you can tell this thing. So in the table level changes, if someone is asking you something, so you can mention, okay, this is the table level changes. Okay, now the material doc mat doc table has been introduced, and the mat doc table will contain all of the data that is previously we are having in the, let's say, MKPF, MSEG, BSEG, or BKPF. So all of this data will be available over here. Okay, so now where was that? So MatDoc table. So basically here let's understand what is the GL account posting. So whenever you are doing a goods receipt, if it is related to accounting side or the material is a valuated material, so in that case there will be a accounting document will be generated, and inside the accounting document there will be some GL accounts will be there. So now let's understand how the GL accounts will be triggered, or when which kind of GL accounts will be triggered. So these GL accounts, this is a starting point of, we can say, it is a integration between and FI, and we will discuss this in details or in depth while we are looking into the account determination process. When we see at that point of time, we will be discussing about broadly, but right now you need to understand what is the impact when you create a material document. Okay, so now let's take an example. You have created a purchase order where the, let's say, material is X. Okay, in PO you have quantity as 10. Okay, price is 10 rupees per piece, let's say. Okay, so PO is 10 pieces. In PO you have quantity of 10 pieces and material quantity is 10 piece. Okay, now at the GR also, quantity 10 piece, price is 10 rupees. Okay, price is 10 rupees, and at IR, let's say price is 10 plus tax. So we have to pay the tax. 10 plus tax will be there in the IR side. Okay, so this is basically the scenario. Okay, now let's see, let's understand the material. In the material we are having a price of two types of price conditions are there. Sorry, two types of prices are there. One is a standard price and one is a moving average price. So let's say here we are having moving average price is 10. Okay, 10, 20, anything you can take. So moving average price, many people can say you what is a map or something, so you can understand this is a moving average price. Okay, so now let's understand what will be the impact. So this is the transaction event keys. Okay, transaction event key, and these are the GL account, and we will see at GR what will happen, at IR what will happen, and at the time of payment. At the time of payment, what will happen? Okay. So now here you need to understand there are some of the standard transaction keys are there when you do a goods movement. So basically here we can start with BSX. Okay. So what is a BSX? BSX is basically it is the inventory account. Inventory account. Okay. So whenever you receive some of the product, that inventory account will be positive. Okay. Or we can say it is debited. Okay. So it is debited, or we can say it is positive. Okay, whenever you receive some of the product, so it will be a positive side. So at that point of time, what will happen? At the time of GR, at the time of GR, you are receiving some of the product and it is positive quantity. How it will update? It will update as per the GR quantity into PO price. Okay, GR quantity into PO price. So what is the GR quantity? GR quantity is 10 rupees, right? And the PO quantity is 10 pieces, right? So 10 pieces into 10, it will be 100. Okay, able to understand this one? Able to understand this one? Very critical thing need to understand. Okay, and this will be very helpful and this will be useful for you for your coming classes and coming career also. This will be helpful. Able to understand at least, yes or no? Tell me.
No, sir.
Okay. So at the time of GR, there will be some accounting entries will be there. How the accounting entries will be triggered, or where the accounting entries will be triggered. So whenever you receive some of the product, what is there? You're receiving means your value is increasing, right? Able to get this? You are receiving something,
Yes, yes,
right?
yes, sir.
So let's say you are receiving a material, you are receiving a, let's understand this well, let's say you are receiving a mobile phone. So right now the phone cost is with you, right? So you are having a mobile phone of 10,000 rupees or 20,000 rupees. Now that is the price you are having right now. So similarly, if some product is received by the plant or received by the, let's say, storage location, so that is a positive quantity, that is a positive value. Okay, so how that value get updated? GR quantity, whatever products you have received, GR quantity we have 10 pieces, and PO price, whatever purchase order price is there, PO price is 10 rupees. So now here GR quantity into PO price, so this is the GR quantity and this is the PO price. If we multiply these two things, it is 100 rupees. Okay, so now at the time of GR, your BSX account will be debited with 100 rupees. Able to understand?
Yes, sir.
Okay. Now, here at the time of GR, what will happen? See, in the accounting side, we cannot only have a positive entry. Okay. So every time what will happen? So every time we are having a positive entry, we have to balance it out. Now, let's say here you are entering something in a positive 100 rupees. Okay. Now, this will show my ledger as a 100 positive. So every time my ledger should show a balance of zero. Okay, every time it should show a balance of zero, it should not show negative or positive. Okay, so if it is a negative also problem, if it is showing positive also, there will be let's say impact will be there. So where you are getting this positive value, so every point of time there will be a ledger balance should be zero. Okay, if we say about this one, so every time the ledger balance should be zero. Okay, every time the ledger balance should be zero. How we can do this zero? We will be balancing it to some other account. Okay, so that is called RX. Okay, it is a IR clearing account. Okay, this is a GRIR clearing account. Okay, now GRIR clearing account means whenever you are doing the GR, this will be credited, means this will be a negative entry. Okay, just to balance this one, this will be a negative entry. So same thing, it will be here as a negative. So minus 100 will be credited to here, or 100 will be credited to here. Okay, this is a negative entry. Okay, don't get confused. It is, if you see about the, whenever there is some money is coming to your account, let's understand it this way. Whenever the money is coming to your account, what it is showing? It is showing money is credited, right? When you get some let's say some amount into your bank account, what is it showing? The message you are getting, right? What is it showing? It is showing money has been credited. If something going out, so it is showing as money has been debited, right? Yes or no?
Yes, sir.
So it is the opposite
Yes,
thing.
sir.
Okay, so it is the opposite thing. So whenever something is coming, that is a debit for you. When something is going, that is credit for you. Okay, in this material side. So this is just opposite to the financial side, what you are looking in your let's say what you understand on your banking perspective. This is just the opposite of that one. Okay, so now here BSX account will be debited with 100 value, and the GRIR or WRX will be credited with 100 value. So this will be at the time of GR. Whenever you are doing a GR, there will be a positive quantity will be there, and there will be negative quantity will be there. Okay. So
So,
now able to
uh,
understand this one?
sir, I have one question. BSX means inventory account means material buying material
So
and
inventory account means, let's say, understand it this way. So okay, so inventory account is basically, let's say you are receiving a product in a warehouse. Okay, so warehouse will be having an account. So that is basically called a inventory account. Okay, let's assume it this way. Let's say in your home you are having a kitchen, right? So you are having a kitchen means there your all of your food stuff, food items will be available there. So monthly, let's say you are saying like, okay, I'll be spending 1,000 rupees for my kitchen expenses. So there is a kitchen account is there. Let's understand it this way. Let's say this is a kitchen let's say account will be there. So you are sending 1,000 rupees, or you are keeping 1,000 rupees for that one. Under this 1,000 rupees you will be buy something. Okay, and you will be something, so that will be related to your kitchen side. Okay, let's say you are saying, okay, 1,000 rupees this month I'll be keeping for my let's say study purpose. I'll be buying some books, I'll be buying some notebooks, I'll be buying some pens or something. So that is your study account. So similarly here in the business also, we are having a inventory account, we are having a, let's say, your customer account, your vendor account. So where the prices will be or value will be updated, or let's say it is crediting or negative debiting, as per that one we will be having some of the accounts over there. Okay, right now this will be little bit of confusing. Okay, try to go through this topic, let's say 3-4 times. Normally you will be having one some idea, and again whenever we are going inside the accounting, what is that, accounting determination process, at that point of time it will be more understanding to you. Okay, so able to understand what I am telling right now, this BSX account?
Sir, it is little bit confusing.
Little bit
Will-
confusing, yes, yes, yes,
confused, sir.
yes, little bit confused because this is a integration topic. Okay, so integration, all of the integration topics will be little bit tough, you need to understand. Okay, so let keep it simple. So simple thing, you are receiving something, it will be a positive value to you. Understood this thing till now?
Yes, sir. That is clear.
That is clear. So same thing we are saying, like for the BSX account, this is a positive quantity, this is a positive value. Okay, because we are receiving something, it is a positive value. Now we need to balance this out. Okay, we need to balance this out. 100 is positive, now we will enter something in the negative, so that it will be balanced. Okay, now for that one we will be having a WRX account, this is a clearing account. Okay, when we enter this as a positive account, positive amount, we will be entering the negative amount here in the clearing account. Okay, in a clearing account we will be putting the negative value. Okay, so able to understand this one? So just to balance out, don't confuse it here. just to balance out. Okay, we have taken a positive entry of 100, so to balance that out we are taking a negative account. Okay, negative entry we are taking. Okay.
Okay, sir.
Okay.
Yes, okay, sir.
Okay, so now we can see the balance is 0. Now this is 100 and this is 100. So now this is 100 and this is 100. So our balance is 0. Now at the time of IR, okay, when we do the invoice receipt, now here there is a negative amount is there. Here there is a negative amount is there. So now what will we do? We will do this negative account to the positive amount so that it will be 0, right? Here also it should be 0. So now this WRX account, it will be debited over here. Let's say plus 100. Okay, the same GRIR clearing account. Okay, so how this will be crediting? So this will be, let's say you are entering a IR, right? You are, whenever you are entering a IR, how the price will update? Price will update as per the, let's say, IR quantity into the IR price. Okay, here we are having IR quantity into IR price. Okay, so in the invoice we are entering some of the value, let's say 10 quantity. Okay, and we are entering 10 rupees per piece. Okay, 10 rupees per piece. So now 10 rupees per piece and 10 pieces. Now it is 100 rupees. We are entering the IR. Okay, so this is a, now this is a positive entry. So this positive entry and this negative entry, these are cancelled. For this account it will be cancelled, right? So now whenever this, now in at the IR point, at the time of IR there is a positive entry. Now we need to have a negative entry to balance it out. Now at the time of IR also, this is the price. Okay, and here you will be having some taxes. Let's say we can take 10% of tax. Okay, 10% of tax, we can say plus 10 rupees. Okay, it's a tax. Okay, able to understand this till now? Able to understand? At the time of IR,
Yes, sir.
at the time of IR we are entering some of the value over there. What is the value? So 10 quantity we are entering, let's say some quantity we will be entering, some price we will be entering. So that will be quantity into price, plus there will be some taxes will be there. So this is the total amount will be there. Okay, so 100 rupees plus 10 rupees, 110 rupees will be there. Now this amount we need to do a negative entry also to balance it out. Similarly, same thing we have to balance it out. So now this tax will be in the VAT account. VAT will be there. Okay, this is basically for the taxes. This is basically for the taxes. Now we have to do a negative entry here to balance it out. So in which account we need to balance it out? We need to balance it out in the vendor account, because next point is we are going to pay to the vendor, right? So now the vendor account is KBS. Okay, KBS is the vendor account. Now here we will be entering this total amount, this 110 amount as a minus 110 in the KBS. Okay, minus 110 in a KBS account. So this here, if we understand it this way, this amount we have to pay to the vendor because it is showing as a minus. So we have to pay to the vendor. Okay, now at the time of payment, what will happen? We are going to pay this amount, right now this is a negative entry in this GL account. Now we have to pay to the vendor this 110 rupees we have to pay. So plus 110 rupees, 110 rupees we are paying to the vendor. Able to understand till now? Able to understand?
Little bit confusing, sir.
Yeah, little bit confusing, no worries. So try to understand, try to go through this couple of times, it will be little bit helpful for you. Okay, this is confusing, I know. Every time for the starting point of time there will be little bit confusion for you. Okay, so basically here we can say, so IR you are able to understand, right? At the time of IR, so at the time of IR the IR quantity will be positive, quantity and price, and there will be some taxes. This is a positive entry, and here we are, to balance it out, we are entering a negative quantity in the vendor account. This is clear to you? Yes or no?
Sir, why balancing is required?
So see, every time we have to balance the balance sheets. Okay, unless we are balancing, let's say there is a positive entry. So sometime what will happen? So let's say your uh, someone is doing the GR, okay, and someone is doing the IR. So to understand to the next department, let's say if you are not having a negative entry right now, what will happen? So let's say in the GR you are only entering this positive amount, okay, there is no negative amount. Now at the time of IR, if it is not showing a negative entry to them and they are again entering a positive value over there, so at the time of IR they will be entering a positive value, right? So if they are entering a positive value, here you are having a positive value, here also you are having a positive value, so everywhere it will be not balancing out. Okay, not balancing out means they will be not. So let's say here if you are entering a positive and a negative value, here the positive value will be adjusted at the time of GR, this negative value will be showing for the IR people. Okay, that there is a negative entry, we need to balance it out, means we need to enter the IR. Okay, if it is showing as a, let's say not showing anything to the IR people, so when they are entering some values over there, so it will be not balanced and it will be not showing as a zero. So it is related to finance side. Okay, so it's a common practice, just understand, like every time we have to make a ledger balance as a zero, so that at the time of audit it will be helpful for us, like we need to we will be finding, or the accounts people they will be finding, okay, this value is coming from here and this value is coming from here and it is balanced. Okay, so that is the basic rule or basic funda. Okay.
Okay, sir.
Okay.
Yes, sir. Okay.
Okay, so IR able to understand, IR entry is able to understand, just a positive entry we are
Yes,
entering.
yes, yes, sir.
Okay, positive and negative entry. So similar thing at the payment, we are doing the payment to the vendor, we need to pay the vendor, right? Yes or no?
Yes, sir.
Right, so now the vendor account is debited, it is positive because we have sent the money to them, right? So now if we send the money to them, we need to send the money from our bank account, right? So our bank account, we can say our bank account is minus 110. From our bank account it is going, right? So it's a negative, right? Yes or no?
Yes, sir.
So this is basically the material GL entry scenarios. Okay, this is one of the scenario, there are a couple of more scenarios are there. This is a standard one. Next we will be going to little bit more critical. So by Monday try to go through this by 4 or 5 times or more than that, till the time you are able to understand. So go through this one. Okay, so Monday we will be again discussing. If you are still there is some doubt or some issues are there, we will be discussing it on the Monday. Okay, and we will be looking to some other scenarios are also there. Okay, so let's say here there is a moving average price is there and the price is same for everything. Next we will be seeing if the moving price is there, PO price is changed. Okay, at that point of time what will be the entry? And let's say it is a standard price is there at the point of time, let's say standard price is there and PO price is changed, at that point of time what will happen? So these are some of the conditions we are going to look into that. Okay, so basically try to understand this thing, it is a standard thing right now, there is no